Okay, it's hard to top, but we're gonna
And
we're
move
gonna
on.
switch from the dogs to our auditors. So we're gonna ask our external auditors, O'Connor Davies, for the report on our fiscal year ending in June 2025.
So we'd like to welcome Jeff Shaver from PKF O'Connor Davies up to the mic. I know it's a tough act to follow, I'm sorry.
I know.
Maybe we should let you go first before the dog. right?
Good evening. Thanks for setting me up there like that. I've never had to go after a dog.
And don't worry, you know these cute safety patrollers waiting for you to be done to go next.
It's a tough act to follow. I will try to be brief. Again, my name is Jeff Shaver. I'm a partner with PKF O'Connor Davies, independent auditors for the school district. Happy to be here to present the results of the audit for the fiscal year ended June 30th, 2025. I believe everyone's been given a book. I'll try to take you through this. The audit process started back in the summer. We spent a week here. Our audit managers sitting in the stands, Carolyn, in charge of a team of about 4. We spend a week here in addition to some preliminary work that we do. And of course, there's some follow-up and wrap-up after that. And bringing us to the conclusion, the report is due to be filed with the state October 15th. So we're way ahead of schedule. This is actually your school district report was my first of the year, so you're the fastest this year, and this is my first board meeting to do a final presentation. So congratulations that you're ahead of the game, you're doing faster than the average. The audit went well. We received everything that we asked for. We got full cooperation from all your business official, your district treasurer, and all the staff. They made it a pleasant audit. The books are in, I would say, very good condition. Audit adjustments or corrections we had to make to the books were very minimal, which makes our job quite a bit easier when there's less things we have to find and fix as we're moving through. So it does make our lives a lot easier for your books to be in good order. We have issued, and this is what the first page after the table of contents is the independent auditor's report. We've issued what's known as an unmodified opinion on your financial statements. It's also referred to as a clean opinion, and that's the most favorable opinion that you can receive. What that means is the financial statements are fairly presented in all material respects. So we've looked through all the numbers that you see in the book. Some of the numbers I'll talk to you about in more detail. And we're comfortable that this is an adequate presentation in accordance with the United States government accounting standards. There is also a required report on internal controls over financial reporting. We've put that in the back of the book. Sometimes we refer to that as the yellow book report, that's the book that the standard is written. It's actually a yellow book, or it used to be. In that report, we would be required to tell the reader if we identified any material weaknesses or significant deficiencies in your internal controls. I'm happy to report that this is also a clean opinion, so no material weaknesses in internal controls or significant deficiencies were identified. With that said, I'd like to take you through some financial highlights. If you want to follow along, I'm on page 59. This is the general fund. Schedule of revenues, expenditures, and changes in fund balance, budget and actual. The first column is your original budget. The final budget is following, encompassing any transfers or amendments that were made during the year. Third column is your actual results. Encumbrances are open purchase orders or commitments as of June 30th, which will roll into your next year's budget. And the variance is the difference between your final budget less your actual results and encumbrances. So you can see from a revenue point of view, the original budget anticipated $58.9 million of revenue to be collected. The actual revenues collected for the year were $61.2 million, some $2.4 million greater than what was anticipated to be collected. There were some, what's referred to on the report as charges for services. Within that category is tuition charges to other districts. There was some $300,000 greater than budget. In the use of money and property category, that is where interest income is recorded. That was some $970,000 greater than what was anticipated to be collected. Keep in mind, the interest rates have stayed relatively high. The district's been able to earn favorable interest rates all year. That fact wasn't known during the budget adoption. In addition, some of the surplus interest income has to be allocated back to your reserves, so it's not prudent to budget for those types of items. State aid was better than budget by $481,000, and miscellaneous income by $566,000. In terms of the expenditure or appropriation side of the budget, the original budget called for $59.3 million of spending. The actual expenditures for the year were $56.993 million. After factoring in open purchase orders of $612,000, that left you with a budgetary surplus of $1.9 million, or underspending of your budget. And that represents about 3% of what you anticipated to spend. So said another way, you spent 97% of what you anticipated to spend initially. So while it is $1.9 million is a significant dollar amount, when you look at it in terms of percentage, you really were fairly close to what you anticipated to spend. There was a budgeted transfer in from the debt service fund of $1.3 million, which is below the expenditures and other financing sources and uses. Because the district had these other surpluses, it decided it didn't need to use that fund balance from the debt service fund, so the transfer was not made. So that was actually a shortfall in your budget. The net amount of all the surpluses I mentioned and the one negative on the transfer in comes to a budgetary surplus of $2.9 million that you did better than your budget. Keep in mind that $2.9 million isn't all actual surplus, because when the budget's adopted, there's a use of fund balance in the budget, which means, said it, or the way I like to say it, you're anticipating your fund balance to come down. When you appropriate fund balance, use money from your reserves, or use money from your unrestricted fund balance, you're anticipating your fund balance to come down, assuming you collect all your revenues and spend all your appropriations. So that number was approximately $1 million that you anticipated to lose of your fund balance. You didn't lose the $1 million, you ended up generating the $2.9 million I mentioned. After adding back the open purchase orders, the difference between those two is your actual surplus for the year. So the actual surplus, $2,548,000, net increase to your general fund balance. So the ending fund balance for the general fund only is $22.2 million. I'd like to briefly take you through the components of that fund balance, and you can see that on page 49. This is the general fund is just the first column on page 49. You'll see at the bottom the number I mentioned, $22.2 million. The bulk of your fund balance is in the what we call the restricted category. Those are legal reserves that the board has set up to fund for future obligations related to these specific items. You generally cannot use those reserves for anything other than what they're specifically set aside for. You have reserves for property loss and liability, $719,000, tax certiorari claims, $1.8 million, employee benefit accrued liability or payouts for employees when they retire, $1.7 million, ERS retirement contributions, a total of $3.4 million. However, $1 million of that restricted fund balance has been used to balance the 25-26 budget. $2,145,000 for TRS retirement expenditures and future capital projects, $8.9 million. That can only be used pursuant to voter authorization to take that money out to be applied towards a specific capital project. So that's your total restricted fund balance, $18,892,000. In the assigned category are those purchase orders I keep on talking about. Those are commitments that will be fulfilled next year, $612,000. And your amounts designated for subsequent years' expenditures, that's the amount of your unrestricted fund balance used to balance the 25-26 budget. That's $200,000 in the assigned category and $1,048,000 in the restricted category combined. That's $1,248,000 used of your total $22.2 million to balance your 25-26 budget. So when you start the year, your anticipated spend down of your fund balance is that number, $1,248,000, plus those encumbrances. When I come back here next year, that number, that balancing figure next year will be the sum of the $1,248,000 and the $600,000. Let's call it $1.8 million will be your anticipated takedown in the general fund balance. The residual fund balance is referred to as unassigned fund balance. New York State only allows a school district to keep 4% of the next year's budget as unassigned fund balance. And you are currently at the maximum allowed under the state law, 4%, and that's $2,533,000. That's fund balance that's allowed to be kept as surplus to be used for whatever needs come up at the discretion of the board. And that is your total fund balance, $22.2 million. There's a lot more in the report. I don't think anybody really wants me to go too much further. I'd be happy to if you'd like, but I'd like to just open it up for any questions, comments that anybody has.
Does the state put a limit on all of the reserves that a district can have? I know on the, the general fund, there's a limit of 4%, as you said, but all the different reserves, capital projects, the retirement, things like that, is there a limit that the state puts on those in total?
Not that I'm aware of, no.
No, okay.
There's, some of them are self-imposed, like for instance, the capital reserve, that's a voter-approved reserve.
Right.
So if the voters approve up to, I believe, $10 million in your case, to be put in a capital reserve, that's now imposed on you by the voters. You can't go higher than that $10 million.
Understood, right.
So there's a maximum there set by the voters. Generally speaking, like most of the reserves need to be supported by future obligations that are real in nature, like tax certiorari. Most districts in this area, they all face the issue of tax certioraries, someone coming in challenging their tax assessment, asking for tax money back. That becomes a bill to the district. This reserve is there to offset that cost, so you don't have to, you don't have to scramble, so to speak. I've seen districts have to issue debt to pay large tax certs in the past. So the $1.8 million is there when those claims come to bear. And there are real claims outstanding filed. It takes years sometimes to settle them. You don't know exactly how they're going to land, but the 1.8 is set aside for those claims. The TRS retirement contribution does have a legal cap. New York State, that's actually a relatively new reserve. Maybe it's about 5 or so years old. It can be no more than 10% of your teacher's salaries for the previous year.
Okay.
So your teacher's salaries last year were about $22 million. You can't have any more than $2.2 million in that reserve.
Got it.
So you're close to the maximum there. That covers about not quite 1 year's worth of invoices. So just to give you an idea, the spend on the retirement bill for teachers has been, I think last year was actually 2.4. So the 2.1 is not even enough to cushion for 1 year. Am I missing any? The only one there's not really much of a cap on at all in terms of legally is the Employee Retirement System Contribution Reserve. I don't know of any statutory caps. It's just what the board feels is a prudent amount to keep in that reserve. As I said before, $1 million of that reserve has been earmarked towards 25-26. So you really will have $2.4 million left over. You look at the annual bill, that's how I would benchmark the reserve against what is your annual spend. Your spend is about, I want to say, I don't want to misstate. $750,000. So, a little more than 2 years worth of bills. So it's not what I would call excessive in any way. It's just a nice cushion to offset against future increases. Those rates, those ERS retirement rates have been creeping up over the last couple of years, unfortunately. The TRS retirement rates have remained relatively stable. I think they dropped slightly for 25, 26, but you don't know what the future will bring. If the stock market starts performing poorly, they will eventually have to increase those rates, and that's what those reserves are there for. You tap into those, with those big increases, when those big increases come.
Yeah, thank you. Thank you.
Okay, thanks.
Thank you.
Thanks a lot.
Thank you.
I'd like to say, first of all, thank you to O'Connor Davies for their work, to Grace for all the work that she's done to make us fiscally responsible and fiscally solvent. And I'd like to welcome, we had a new community member on the audit committee, Mark Dexter. We really appreciate his insights and his questions, because we all learn from that. So those are, Jeanette?
So,
Barbara just took all my notes.
so I also wanted to thank Jeff and his team. They're professional. They come in, you don't even really know they're there. They get all the work done. And really a huge compliment to Dr. Chan, Matthew Sirico, our district clerk. They really do a lion's share of that work, along with the support of their office, to make sure that the auditors have all the information they need. So it's a tremendous amount of work. We were racing against the expected birth of a child, which is why we were first. You guys were able to get the audit done and complete prior to, so we reached our benchmark there. And I just wanted to thank everyone who's involved. A tremendous amount of work is done in a very short period of time, and I'm glad that all the results came out in the positive. So thank you. I will turn it over now to Ms. Yetter, who will speak on behalf of the Audit Committee.
Just getting what Barbara had just stated, so thank you for your work on this, and Carolyn and Mark for your attending tonight. I appreciate your time, as well as Tom Sawyer, who was not able to attend tonight, and Guy Cohen, who has been on the Audit Committee for many years, who seems to be stepping back. We want to thank him for his service, but we are glad to see that we are in good standings, and thank you for your detail that you went through with us to bring us to this point. So we appreciate your time and effort. Thank you. And Dr. Chan, of course, and your office. So thank you.
Thank you.
Thank you very much.
Thank you.
Okay, thank you.